Imagine a roller coaster ride, but it's not in an amusement park, it's on your investment portfolio. That's what Bitcoin has been recently. Picture this. It's a serene weekend and out of the blue, Bitcoin prices take a nosedive. The culprit? Escalating tensions in the Middle East. Investors' hearts skip a beat as they watch the value of their portfolios shrink. Bitcoin, the digital gold, drops to a low of $60,000. But wait, just as you brace for impact, the roller coaster takes an unexpected turn. In a surprising twist, Bitcoin prices surge, rebounding to around $66,000. It's a wild ride, isn't it? And it's one that's being fueled by a multitude of factors. One such factor is the introduction of new Wall Street spot Bitcoin ETFs. These exchange-traded funds are breathing new life into the market, attracting institutional investors and enhancing liquidity. It's like adding rocket fuel to the Bitcoin roller coaster, pushing it to new heights. Meanwhile, competition is heating up between Hong Kong and New York, each vying for the crown of the crypto capital of the world. With Hong Kong financial giants reportedly receiving approval for spot Bitcoin and Ethereum ETFs, the race is on. These developments are expected to draw significant demand from mainland China, adding a new layer of excitement to the Bitcoin roller coaster ride. And let's not forget about the US, which has already approved over $50 billion in assets under management for spot Bitcoin ETFs, with powerhouses like BlackRock and Fidelity leading the charge. Just when you thought the ride was over, Bitcoin pulls you back in. New players are stepping onto the crypto field, and they're not just any players, they're Wall Street giants. There's an undeniable buzz in the air, a sense of anticipation. A new chapter in the cryptoverse is being written, and these Wall Street stalwarts are holding the pen. Let's dive a little deeper. The introduction of new spot Bitcoin exchange-traded funds, or ETFs, by Wall Street has sent ripples through the market, giving it a significant boost. This isn't just a quick pump, it's a game changer. These ETFs offer an easy way for investors to dip their toes into the world of crypto without needing to navigate the often confusing landscape of wallets, exchanges, and private keys. But Wall Street isn't the only one making moves. On the other side of the world, Hong Kong's financial giants have reportedly received approval for their own spot Bitcoin and Ethereum ETFs. This is a major development, one that's expected to attract institutional investors and enhance market liquidity. So, what's the big deal? Well, these ETFs could trigger a tidal wave of investment from mainland China, a market with enormous potential. The competition between Hong Kong and New York for crypto capital inflows is heating up, and it's anyone's game. These developments aren't just another news headline. They're a signal, a sign that crypto is moving from the fringes of finance into the mainstream. The world's biggest financial players are embracing digital assets, and the implications are enormous. These developments are not just changing the game, they're rewriting the rule book. The East is rising, and it's not just the sun, it's the crypto market too. In the world of cryptocurrency, there has always been a tussle for dominance. The recent times have seen this competition intensifying between two global financial hubs, Hong Kong and New York. Both cities are vying for the lion's share of crypto capital inflows, each with its unique strengths and offerings. Hong Kong, a special administrative region of China, holds a unique position. The city is a gateway to the East, a bridge that connects the world to the vast economic powerhouse that is mainland China. With its robust financial infrastructure and regulatory framework, Hong Kong is positioning itself as a hub for cryptocurrency activities, a move that is attracting institutional investors and enhancing market liquidity. A significant factor in this East versus West crypto battle is the expected demand from mainland China. Despite the country's previous stance on cryptocurrency, it seems the tide is turning. The Middle Kingdom is showing an increasing interest in digital assets. A potential vast market is opening up, and Hong Kong is poised to serve as the perfect conduit for this new wave of crypto enthusiasts. On the other side of the globe, New York isn't sitting idle either. The city has already approved over $50 billion in assets under management for spot Bitcoin ETFs. Major issuers like BlackRock and Fidelity are emerging, indicating the city's readiness to take on the Asian challenge. But the real question here is, what does this mean for the world of cryptocurrency? Well, the competition is good news for the market. It means more options, more liquidity, and most importantly, more acceptance of cryptocurrencies. The crypto market is gaining legitimacy and is increasingly becoming part of mainstream finance. The intensifying competition between Hong Kong and New York is not just a duel between two cities. It's a reflection of a broader global shift towards embracing digital currencies. It's an indication that the world is ready to accept the new order where cryptocurrencies are not just an alternative, but a vital part of the financial ecosystem. The dragon is awake, and it's eyeing the crypto treasure. The land of the free is not standing still. It's making its move. In a world where digital assets are rapidly shifting the economic landscape, the United States is stepping up its game. A game-changing move has been made with the approval of over $50 billion in assets under management for spot Bitcoin ETFs, a decision that has sent ripples through the crypto community. This is more than just a financial decision. It's a declaration, a statement of intent that the U.S. is embracing the future of finance. It's a signal to the world that the U.S. is not only ready to compete in the digital economy, but is prepared to be a leader in the crypto space. At the forefront of this revolution are two financial powerhouses, BlackRock and Fidelity. These institutions are not just participants in the crypto world, they are major issuers, gatekeepers who are shaping the landscape of this burgeoning field. With their involvement, the message is clear. Cryptocurrency is not a fringe element of the financial world, it's a central player. BlackRock and Fidelity's involvement in the crypto market is significant. These are institutions with a combined history of over a century in the financial sector, and they're diving headfirst into the digital currency world. It's a powerful endorsement of the potential and viability of cryptocurrencies. The US is showing the world that it's not afraid to embrace change. It's not just dipping its toes into the waters of the crypto world, it's diving in. With over $50 billion backing Bitcoin ETFs, the US is making a decisive move to not just participate in the crypto economy, but to shape it. This is a pivotal moment in the history of finance. It's a sign that the US is ready to navigate the new digital frontier, and it's inviting the world to join it on this journey. The eagle is not just soaring, it's taking flight into a new era. So, what does this mean for the world of finance? It's a sign that the crypto world is not just a playground for tech enthusiasts and speculators. It's a legitimate, recognized part of the global economy. The eagle is soaring, and it has its sights set on the crypto sky. The US is ready to embrace the future of finance, and it's setting its course towards a digital horizon. It's a brave new world, and the US is ready to lead the way. So, what does all of this mean for you, the investor or the crypto enthusiast? Well, the key takeaway from these developments is that the cryptocurrency market is expanding, and it's not just confined to the traditional powerhouses. The emergence of Wall Street spot Bitcoin ETFs and the approval of the same in Hong Kong indicates a growing acceptance of cryptocurrencies in the mainstream finance sector. This could potentially lead to an influx of institutional investors, which in turn could enhance market liquidity. Now, what does enhanced market liquidity mean for you? It means you can buy or sell your digital assets more easily without significantly affecting the market price. This is a huge plus for individual investors who may not have the financial clout of institutional investors. On the flip side, with more players in the game and increased competition, the volatility of the market could also increase. We have already seen how the price of Bitcoin can swing dramatically in a short period. The entrance of new institutional investors, driven by the prospect of high returns, could further fuel this volatility. Additionally, the intensifying competition between Hong Kong and New York for crypto capital inflows could lead to regulatory changes in these markets. While some of these changes could be beneficial, others might introduce new challenges for crypto investors. The potential demand from mainland China also adds another layer of complexity. If mainland China, with its massive population and economic power, becomes a major player in the crypto market, it could significantly influence the price and stability of digital currencies. In conclusion, these developments present both opportunities and risks. As an investor, it's crucial to stay informed and make calculated decisions based on the latest market trends and regulatory changes. In the world of crypto, the only constant is change. So, strap in and enjoy the ride.